Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you're getting some good trades. With a better than expected USDJPY report today of 4% when most economists were only looking for about 3%, we had a strong dollar across the board. Dollar yen here is an example of the strong movement that we had. The dollar yen starting at about 102 today and cresting up here above the 103, taking out a barrier today before the FOMC meeting minutes came out. And then it spiked up a bit higher, close to the 103.10 level, based upon some hawkish descent in the FOMC. And that suggests that there's the potential of higher U.S. interest rates sooner than later. And after all said and done today, the market settled back down. Now, some things to take away from this, because I've had some people write me and say, well, since it's made such a big move, would this be a good time to sell it since it's coming back down? Remember, what you want to do when you sell is you want to sell into strength. You want to avoid selling into weakness. And what we have here, the selling that's going on here, is simply closing long positions. When you close a long, you put in a short. These are shorts or short selling to close long position, take profits. This is not selling short to go short. So be aware that when the market makes a big move like this, be careful that you fade the market. Hold in and look to buy on dips. Let the market grind back a little bit and look to buy on a dip. If we have continuation of strength in the dollar, if we have continuation of the U.S. 10-year Treasury bond being stronger than Japanese government bonds, I'm going to look for continuation higher in the dollar yen. Also, if the dollar index continues to maintain its strength, we got up to 81.50 today in the dollar index, I'm going to look for a push higher. Well, where to? If you go and take a look at the weekly chart, there's a couple of levels you need to be aware of. First off is the 103.72 level that was set back in May 19th of 2013. We got to that peak, we fell back over. Next was December the 29th, had a nice move up here to 105.43. I don't see us getting to that anytime soon, but what my thought is if we have continued strength in the dollar, some good flows at month end here, there's just that possibility. Sometimes I've seen the market have a strong move after a strong move. Who's to say? We could get a strong push up and attempt to break a 103.50 barrier. The market loves to take out barriers. So if the market pushes up overnight on this strong dollar sentiment in Asia, and that's followed by Europe, there's the potential we could see a push all the way tomorrow up to that 103.70 area. Not saying it's going to get there, but my thought is I'm not about to fade this market. What I'd be looking for is I'd be looking for a possible pullback and a buy on a dip. If I don't get the pullback, I'm going to be looking to see what the difference is between price action and market sentiment down that 15-minute chart. Something about the 15-minute chart here that happens over and over again that I've talked about is when you look at price going flat, doing nothing as it is right now, but the Trader's Dynamic Index comes all the way back over and you have current sentiment reflected by the green and the red line and the market baseline, the yellow line, coming back to 50. They all get back to 50 and price doesn't budge. That means sentiment has reset itself and is ready to go. And what you end up with to some degree is hidden divergence. Take a look at this. You have lower lows here in the Trader's Dynamic Index, but yet you have higher lows. That suggests potential continuation. It's not showing its hand just yet, but we have potential continuation. Again, this is short selling to take profit on longs, not short selling to go short. Now, what I'll be looking for then is, okay, if the low today was in that close proximity of 102, and then we have this high right there, we're sitting somewhere in the ballpark of 23.6. If I take out that wick and just really work with this one right here, which was that kind of more or less, I called it kind of a true high on the day. The market worked up, stayed in that general vicinity, and settled back down. You can see that we're sitting right at the 23.6. If we happen to get a bit more pullback in Asia and Europe, I'm going to be looking for then the fall back down to 38.2 standard profit taking, but we have bids currently in the market sitting in the neighborhood of the 102.50, 102.40 area, and definitely more bids sitting down there around that 102.25 area. If we take a look at the daily chart, something I note time and time again is that price has a tendency to go where it's been before. Well, look where we're sitting at right now. We're sitting at a previous high. Market settled back down to a previous high. Now, if the market's going to dip down some more, where's it going to dip down to? I see that there is a high right there, and I see that there's another high a little bit lower right about that 102.26 level. So here's my thought. Look to buy on a dip or look to buy on a continuation. So again, the market sits here at the 23.6 level, and that's all we get. We've got a nice little descending pattern here, and this right here looks like a bullish pennant pattern. That's an upward directional bias. We'd be looking for the break of this and a higher if sentiment comes down here and settles. If the market has a tendency to drop back down, just make note of these levels. Now, another thing to be aware of too is the market's gone well beyond its third extension high of the week. We can see it slide back down that 102.50 area, really give a good test of that level, and then work off that level. So be looking to buy the dip or buy the continuation. Well, this is Dean Malone with Compass FX. I hope some of the information I've shared with you about the dollar yen and where it could potentially be going over the next coming days will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.